Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur and property investor, and in today's video we're talking about what's happening with the Great British Pound. It is currently crashing against the dollar. So what we're going to do in this video, we're going to talk a little bit about what's happened, a little bit about why it's happened, a little bit about what it matters to us, and why it's going to have a lasting effect on the UK economy. So if you like this sort of video, if you like this sort of content, please give this video a big like. It does help me out with the algorithm. And if you haven't already subscribed, consider subscribing. Until I get to 10,000 subscribers, you can book a free one-to-one call with me. Look at the link in the description. Book those calls in now, because at the time of recording this, I'm on about 6,500 subscribers, and it's growing by a couple of hundred every week. So you've only got about 10 weeks until I will no longer be able to keep up with that level of demand, because I'm doing 2 or 3 every day. So guys, let's get into the video. Let's talk about what's happening to the Great British Pound. Now, obviously for anybody who doesn't know, the budget came out in October of 2024. Now the budget was obviously a Labour budget, and it came out with big tax rises and big spending plans. Now, what did this mean to the markets? Well, the markets kind of digested this information, and they said, we don't believe that this plan is better than the plan that was there before. And what that meant was that the bond markets, i.e. the amount of money that the UK government have to pay in interest to the markets, spiked. So investors were saying, we will buy that bond gilt, but we're going to charge you a premium for it because we don't believe as much in the plan. And this is capitalism. Equally, what happened was that the pound started to devalue against the dollar. And you might say that the dollar's just been a very, very strong currency, and that is true. But when you look at this graph, you can see that we in the UK over 2024 have devalued more than any of the dollar's major trading currencies. Now, why is this? I mean, it's really around faith in the government and the British economy. We have basically zero growth. We are looking at potentially going into a recession early next year, and yet the government have these big spending plans and big tax rises, which are going to affect UK households massively. Now, why is this important? Why does the dollar price versus the Great British Pound affect people so drastically in the UK? And it's this. The dollar is the reserve currency of the world. Most major commodities are traded in dollar. Whether you're looking at precious metals, gold, silver, platinum, palladium, all of those things, dollar. If you're looking at natural resources, gas, if you're looking at oil, all those things, dollar. If you're looking at foodstuffs, grains, rice, wheat, all traded in dollar. And because it's the reserve currency of the world, and because all these commodities are traded in dollar, and the UK is a net importer, not a net exporter, we import way more than we export, then the dollar to pound price ratio really does matter to us. It will have an inflationary effect. If you can imagine that at the moment you bought some oil, we'll just say a specific amount of oil, 10 units of oil, and it was £10. These aren't real numbers, obviously. But then the dollar strengthened against the pound by 10%. Well, now we would need to pay £11 for the same amount of oil because there's a 10% swing in currency. And that doesn't mean that oil became more expensive in dollar amount. No, not at all. It just meant the pound devalued. And if you play that out across the entire economy, across all of these imports that we make in terms of commodities like oil and gas and all the raw materials for building, all of these things, all imported, then that's obviously going to have a huge inflationary effect on the economy. Now, what can the Bank of England and what can we do about this, and why does it matter? Well, we've discussed why it matters because it means it's going to have an inflationary effect. What the Bank of England can do is they can raise interest rates, and that will encourage people to invest in UK pound over dollar, and that generally will strengthen a currency. Now, that's all great, but at the moment we have a stalling economy. So to remove more liquidity out of the market by charging businesses and mortgage holders more money to pay off those debts is only going to remove more cash from the system. So the Bank of England's in a very, very tough place. It's currently got its interest rate sat at 4.75%. As recently as 3 months ago, we were expecting that to drop to 3.75% or below by the end of 2025. Lots of economists are now coming out and saying, and lots of market predictors are now saying, that is going to be higher for longer. And that is bad news for UK PLC. It means that just simply having the money is enough. If the interest rate is greater than the rate of inflation, then having money has value. And this isn't a position we've been in for a long period of time. Generally speaking, over the last decade, interest rates have been lower than the inflation rate. And that's the signal to the market that just having the money isn't enough. You have to do something with the money. You have to invest. You have to drive innovation. You have to make more money. You can't just have it in the bank. When you have interest rates that are higher than inflation, you can just sit money in the bank. And that makes it much more difficult for people to build businesses, for people to be able to invest in property, for people to be able to do things with money, because simply holding it is enough. And in my opinion, that is not how you build a big, strong economy. Now we have to take all this information, we decide what we think is going to happen and how we can improve our lives. Now I think readying ourselves for higher interest rates for longer is probably a smart thing. And what I'm about to say really is a big issue for the UK economy, because what I'm about to say is if you've got a job, if you're going out and you're thinking about upgrading your house and maybe having an extra £200,000, £300,000 mortgage, maybe today isn't the right time to do this. Conversely, if you're an investor and you're looking at expensive properties with expensive mortgages and high interest rates, again, today is not the day to do this. As an investor, I can tell you the areas that I'm looking in, like Sheffield, Corbury, Wellingborough, Kettering, Nottingham, all of these areas where I can pick up property for under £150,000. The higher interest rate really doesn't hurt that deal too much, because nominally speaking, it doesn't have a great effect. Now, I think the greatest and most likely outcome from this dollar-pound swing is the Bank of England in February is going to come out and say that they are not moving interest rates. I think we're going to have to keep interest rates higher for longer to strengthen up this pound. And the reality for UK PLC is that means less growth. And less growth means that the likelihood of a recession becomes much greater in the next 6 months. So my prediction is actually the UK is highly likely to go into recession over the next 6 months, and there is nothing that the Bank of England can do about this, ironically. Normally the Bank of England can move. In this instance, I think it's the government that need to move. The government need to change tact. They need to understand that the UK PLC cannot afford these massive tax rises. It's just not affordable. And if you can't afford it, then you've got to cut spending. You've got to make sure, in the same way that in my household, if our income isn't great enough, we can't buy and invest in all these capital projects. The UK government simply can't afford it because the UK PLC can't afford it. So my opinion is that the Bank of England will have to hold interest rates for much, much longer. That will have a negative effect on businesses, on households, and anybody who borrows money in order to make purchases or investments. And that will hold the UK back from any growth. And because of that, we are likely to see a recession in the next 12 months. Let me know your thoughts down below, guys. I look forward to seeing you on the next video. Thank you so much for watching. See you soon.